Look up. And here it goes. Follow the yellow brick road. Follow the yellow brick road. We're off to see the lender, the wonderful lender of Oz. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. If it's your first time tuning into our channel, do me a huge favor. Hit the notification or subscribe button so you're notified every time we go live. We go live Mondays and Wednesdays on Facebook and YouTube, and we post our content Sunday mornings and Wednesday mornings at 9 a.m. How you guys doing? Hopefully you're having a great night. Oh, one last thing. This is an interactive channel. So if you have questions regarding home ownership, our channel is a channel you've got to ask all your questions on. I don't care if you're buying a house tomorrow. I don't care if you're buying a house a year from now or 5 years from now, but you had questions, definitely ask. And if we bring value to you by answering your question, do me a huge favor and like the video. All right, guys. So tonight, we are going to talk about the complete home buying process. I've scoured the internet, and you know how many versions of the complete home buying process I've seen out there? There have been tons, right? And of course, everyone has their own version. Not one person's version is correct. But tonight we're going to go over my version. Over the past 4 years of being on social media, talking about mortgages, we've refined it over and over and over again until we got the exact steps. So I put together the home buying process. It's kind of like playing a game of hopscotch. I don't know if you remember playing hopscotch growing up. That's how I'm outdating myself by talking about it, right? Remember, it was 3 squares, right? 2 squares, 1 square, 2 square, 1 square, 2 square, 1 square, right? Remember that? It's like 9 steps. So tonight we're going to go over the 9 steps of the complete home buying process, all right? So let's start with step 1, finding a lender. So traditionally, people went out back in the days, they drove around houses, they drove around the neighborhood, they found a house, oh, we want to buy that one, right? Husband and wife, or individual person, or husband, wife, whatever your flavor is, right? You want to buy a house, you walk in the house, you fall in love with the house, and then the realtor refers you over to a lender, right? And that lender gets you approved to buy that house. But times have changed. We have a limited amount of inventory out there, right? The house that you might go up and see might not be the house you're going to get. Also, a lot of times right now, you go out there, you don't know what you want. Why would you talk to a realtor and fall in love with the house when you should fall in love with the payment? So times have changed. So step 1 is finding the right lender, right? So that's the first step. So before you start going on Zillow, Redfin, start liking a bunch of homes on the internet, find a lender and get approved, okay? Once you go out there, you find a lender and you get approved, right? You're going to bring them all your documents, your income, your assets. They're going to run your credit and get you approved. Your credit report is good for 90 to 120 days, right? A big mistake people make all the time is they don't want their credit ran, right? They fall in love with the house or they talk to a lender, but by the time they find a house and they run the credit, it's not where they want it to be, and now they're in a payment they don't love, or they're not going to get the house that they want because they were 1 step behind. So definitely let a lender approve you. And for them to do that, they must run your credit. So in step 1, you find a lender, they run their credit, they approve all your income, they run something called DU, Desktop Underwriting, or LP, Loan Prospect. If you're working with a specific lender that does underwritten approvals, get it. What's an underwritten approval? An underwritten approval is when a loan officer collects all your documents, uploads your application in the system, and they let an underwriter review it. When an underwriter, who gives the final say in giving you the money, approves your loan, validates the income, the credit, and the asset, all they're going to have to do next is, once you find a home, approve the property. So an underwritten approval is like a golden ticket to home ownership. So in step 1, if you have all that done up front, it will be smooth sailing. The reason why a lot of people don't have a smooth sailing is they don't go for that underwritten approval. They go to step 1 and they only get that pre-approval, where a loan officer gives you their opinion on your application. It hasn't been validated by an underwriter. So if you get that done in step 1, it will be a smoother transaction. Okay. So once a loan officer approves you, gets you that underwritten approval, that DU, that LP, right? Should you call a realtor? Skirt. Then you shop for a loan, right? I don't know why consumers don't ask. I would definitely ask, hey, can I see your fee worksheet? Can I see your loan estimate? What rate am I getting? A lot of times when people go through step 1, a lender tells them you're approved up to X amount. And consumers get so excited that they got approved because they didn't think they were going to get approved. They forgot to stop and go, hey, wait a minute. After I love this house, oh, I love my home, and you start making a couple payments, you're like, hey, why is my payment so high? Where's my money going, right? You want to resolve all those issues in step 1. So you want to interview a loan officer. You want to have them qualify you. I would recommend you get an underwritten approval, right? It's good for 120 days, okay? And then you want to shop your loan with that specific lender, right? Find out what rate are they going to give you. Are they giving you a lender credit, right? What are the lender fees, right? That's step 1. Once you have step 1 down, step 2 is a little bit easier. Now you call around, you find a realtor. For me, I would talk to a couple realtors. Make sure they're good at negotiating. Make sure they're licensed first. Make sure they're good at negotiating, right? And make sure they understand repairs. Unless you're buying new construction, but even with new construction, you want a realtor that's there to protect you, right? The last thing you want to do is buy a lemon. It's expensive fixing a home, and you want to minimize, right, any issues. So if you work with an experienced realtor that understands, hey, this is wrong, the deal can probably close, but these are the expenses you probably will occur, right? That's why I look for 3 things. Make sure they're licensed. Make sure they know how to negotiate, right? And they're talking to you. If they're talking to you like, right? They're going to have some problems with the selling agent, right? And then also make sure they know a little bit about construction, right? If they flip property before, great. If they own other properties, great. That means they know the little issues that will pop up, right? So once you interview your realtor and you pick your realtor, right? You give them your pre-approval letter, your underwritten approval, right? You're like, here's my approval. And then make sure the realtor and the lender talk. It sounds crazy, but I'm telling you right now, the realtor and lender, sometimes they don't talk. And when they don't talk, you get your offer out there and you're short to close, right? Because the realtor and lender, they don't talk. You're doing down payment assistance. You're coming in with some money, not all your money, but the realtor doesn't know, right? And they tell the seller you're covering everything yourself, but really you're not, right? So definitely make sure your realtor and your lender talk. Make sure they go over what's your max you can get approved for. What money do you have in case the home doesn't appraise and you have to come in with the difference of the money, or if there's any issues, you have some money. If you don't, then it's fine. But your realtor needs to know. If your lender doesn't talk to your realtor doesn't know when they're going and asking for things from the seller, they don't know what wiggle room you have and what wiggle room you don't have. And if you don't have it, then they know to avoid those conversations or how to rebuttal them. Okay? So number 1, step 1 and step 2 are important, right? It's called communication, right? Make sure you get your approval, you interview your lender, you get your approval, you shop your loan, you interview your realtor, and they both talk, right? Once they both talk and you guys have a solid game plan, step 3, you search for a home, right? In step 3, you look for a home, right? You write offer after offer. Make sure you stay in your budget from your underwritten or your pre-approval, right? Also, remember, guys, as rates change daily, if they go up or down, you want to go back to your lender and find out, hey, if rates went up, you might qualify for less. You might lose out on some lender credit, but definitely stay on top of things. Talk to your lender every week, right? Communication. Hey, lender, are rates up or down? If they're down, right, do I get more of a credit, or do my rate get better, or do I qualify for more home? If rates are up, do I qualify for less home? Do I lose lender credit? What is the deal, right? Definitely talk to them. Sometimes lenders and realtors I see happen all the time, they don't talk. So when you get a step 3, and all of a sudden everyone's running around trying to make sure everything is doable, that's where sometimes you run into issues, right? And you delay and you're taking too long and a seller goes with another offer. So step 3, once you find the house, I count the term as finding the house is when they accept your offer. Escrow opens, which means you have cut your earnest money deposit check, your EMD check, right? Once you cut your EMD check, the seller takes the home off the market, right? When it's on the MLS or on Zillow or Redfin, it will say pending or contingent, right? So it can be contingent because the seller still needs to find a home, right? Or it can be pending something, but it won't it won't say, out on the market anymore, right? It will be in escrow, pending, contingent, right? It means almost the same thing. If you want, you can be a backup, but you're not the main person, right? So once you cut that EMD check, right, they take the house off the market. But once it clears, escrow opens, okay? So escrow starts the moment you sign the purchase contract. That starts the timer, right? If you're doing a 30-day escrow or a 45-day escrow, the timer starts when you sign the purchase contract. But escrow doesn't open until your EMD check clears, okay? So if it takes you a week to finally cut your EMD check, you're a week behind the gun, okay? So make sure the day you sign your purchase contract is the day you want to release release your EMD, right? Not release it, sorry, take that back. Cut your EMD check. So once you cut your EMD check, right, and it clears, escrow can open, right? When escrow opens, now we have a deal. And then you get to step 4, initiating the approval. You can't initiate the approval, of course, until escrow opens. Once you initiate the approval, step 4, right, and you initiate the approval, now they can start the process. So once escrow opens, by law, the lender has 3 business days to send you a valid loan estimate. Before you initiate escrow, right, or initiate the approval, in the step 1 or step 2 or up to step 3, you can ask the lender for a fee worksheet or a loan estimate. They don't have to give it to you, but you want to see it, right? They don't have to, but you could. I would say, hey, if you don't give it to me, I'm going to change lenders, right? They'll provide you something. But the valid loan estimate that by law they must provide you is in step 4 when you initiate the approval, right? Escrow opens, the EMD check clears. The reason why when the EMD check clears, escrow can provide the fee worksheet. It will have title fees, escrow fees, right? So the lender can prepare an accurate loan estimate. So in 3 business days, they give it to you. So it gives you maybe a day or 2 to shop it. In case you do want to shop it or you want to stay with your current lender, by 3 business days, they have to provide it for you, right? And then, of course, your disclosures go out. You're going to have to sign your disclosures. Remember, escrow starts the day you sign your purchase contract, right? But escrow opens the day your EMD check clears. But the lender can't start on your file until you sign your disclosures. There's a form called the intent to proceed. If you do not sign the intent to proceed, lenders can't start on your loan. So if you're going to read your disclosures, read through them quick. Don't wait. Oh, I'm going to wait for my cousin next week when he has time. He's going to read it. He's a lawyer, right? You're going to add more time. The reason why I'm bringing this up, it sounds pretty, oh my gosh, why would anyone do that? People do it all the time, okay? So make sure once you see the fee worksheet, you sign your disclosure. Remember, the fee worksheet is nothing's guaranteed until you bring your money at the end. So everything can void out if you don't bring in your money, okay? So don't stress about it too much, but read the information so you know what's going on, right? So once you sign the intent to proceed, right, you're going to fill out the appraisal form. That appraisal form allows them to order the appraisal, right? They can order the appraisal 3 days after the intent to proceed has been signed. The intent to proceed tells title, escrow, your employer, tells everyone that you're buying a home, right? If your name is Jenny, like Jenny is buying a home, let everybody know. The intent to proceed means it's on like Donkey Kong, right? Step 4 is very crucial. When you initiate the approval, if you do everything up front, it will be smooth sailing. If you take step 1 and you get that underwritten approval, step 4 is even easier. I'm giving you guys the keys of the kingdom, the nuggets of information you need to buy a home with less stress, right? So step 4, you initiate. So if you got your pre-approval or your underwritten approval a month, 2 months ago, you're gonna need updated pay stubs, updated bank statement, updated information. Okay, so when you initiate, you sign all your disclosures, right? You pull all your verifications. If your VOE is over 2-3 weeks old, they might need a new VOE, which is a verification of employment, right? You send all your information for the initial approval. If you do step 4, you do everything up front. You sign your letter of explanations of why you took time off. You figure out what's going on with these random deposits. Step 4 is where you want to do it. Because if you don't, step 5, clearing your conditions, right? Step 5, you have your approval. So this is where people get stuck. In step 5, the appraisal is already back. You fill out the appraisal form, appraisal's back, right? And if the value gets cut, in step 5 is where you go back and you negotiate, right? If your income gets cut, this is where you decide, should you pay off more debt, add a cosigner, drop the rate, get a higher rate, cover closing costs, use some of your money, pay off debt, right? Step 5 is where if any issues happen, this is where they clear it, right? The buck stops at step 5. But if you do everything in step 1 and step 4 correctly up front, step 5 should be smooth sailing. The problem is, barely anyone does do them, right? If everyone waits till step 4 and 5 and they do a skinny package, or they don't provide everything right away, or some things are so outdated. When you're working at the bigger companies, they don't let you submit outdated stuff. When you work at a smaller company, I'm not saying throwing shade on it. These smaller companies, they don't have that volume. They'll take what they can get. And of course, they'll send you out a huge condition list. In step 5, I've seen condition lists like 20, 30 conditions. And the loan's already been approved, right? In step 4, you initiate the approval. Step 5, it's an approval. It's a skinny one. All of a sudden, you see all these conditions, okay? Also, with condition 5, they review the appraisal to clear it, right? If there's something wrong with the property that doesn't go under code, if you're going with an FHA loan or VA loan, you have to clear termite. If there's termite issues, you can't get a VA loan on that home until the termite issue gets cleared, right? On FHA conventional, you can waive the termite, right? So step 5 is where you clear all the income conditions. If there's any outdated income conditions, you clear any credit conditions. Let's say when the loan officer approved you, right? They didn't do the student loans correctly. They didn't do some information correct. They didn't put in the right information in the application, right? Step 5 is where it will show up, and that's when they'll condition. If you get this, we'll omit it because the loan officer omitted for some reason, right? So step 4 and 5 are the crucial ones. Okay, you clear your income condition, credit condition, asset conditions. If you have any large deposits that you can't prove, they're going to have you back it out, right? Or get a new gift, or however it is for you to prove your gift, right? Or prove your money. Okay, so you got income, credit, assets, and the property. So once all those conditions get cleared off, right, then you have your final approval. When you get your final approval, you get close to your final approval. Oh, by the way, in step 3, once you find the property, right, little reverse, forgot to tell you, in step 3, once your EMD check clears, you can lock the loan. So you can lock anytime from step 3, right, in the finding the property in escrow, step 4, initiating the approval, or step 5. Okay, so step 3, 4, and 5, you can lock at any time. When you buy new construction, once you sign the purchase contract, as long as the property is going to be done being built within 6 months, you can lock the loan. And when you lock, you can also do a float down if you want to hopefully rates get better, right? But yeah, so you lock your loan. So step 3, 4, and 5, you can lock whenever you want. Step 6, you gotta lock your loan. If you got to step 6 and your loan's not locked, it's gonna delay the process. Okay, so make sure in step 6, what? The CD goes out. I know. In step 6, right? Before the final approval. When the final approval, they just cleared all your conditions. That means you're not approved, conditionally approved. Your final approval, the CD goes out. The closing disclosure, right? The closing disclosure is 5 pages long. It's going to look very similar to the loan estimate, right? Page 1s on the LE and CD, almost identical. Page 2, the closing cost details, almost identical. Page 3 of the loan estimate, right, is your overall cost of the loan, right? Page 3 On the closing disclosure, right, the CD is going to be a comparison between the loan estimate and closing disclosure. You will see where the fees are off, right, or what changed from the loan estimate to the closing disclosure. Also, you have your loan summary. If you buy a home and the seller already paid the property taxes, you will see it on the total loan summary. If they haven't, you'll see it on the loan summary. Sometimes that's where the dollar amount is off by, is the transfer of taxes. Okay, so you'll see that on page 3 of the closing disclosure. The reason why they don't have on the loan estimate, because you just got into escrow. They have to provide that to you, right? Title hasn't started their search yet to find out if the seller has paid their taxes or not, right? So page 4 of the closing disclosure, right? The loan estimate, 3 pages, right? The summary of the loan, the closing cost details, and the total costs, right? Page 4 of the loan of the closing disclosure, other disclosures, also your escrow account, right? What's being paid to escrow, right? Your impounds, it's all on page 4. And page 5 of the closing disclosure is just like page 3 of the loan estimate, but it's not your 5-year overall cost like the loan estimate. It's your total off 30-year cost, your APR, which is on the loan estimate and on the CD, and then your total interest paid, your tip, right, is on page 5. It's very similar to page 3 of the loan estimate. So once you see the CD, as long as the APR doesn't change by more than an eighth, right, you can dock out. If it changes by more than an eighth, which sometimes it does, you got to wait 3 business days before your docs go out. So in step 6, right, your final loan, your final approval, your CD goes out. You got to verify everything, right? And then the set of docs go out. So they release your lender docs, right? And then escrow provides their escrow docs. When you sign, you're going to sign 2 sets, an escrow docs and loan docs, right? So what's the next step 7? You sign your loan docs. Okay, so the lender, right? The CD, the time period has passed. The loan docs go out from the lender. It goes directly to escrow. Okay, so loan docs hit escrow. Escrow provides their escrow docs. So when you sign, like I said, there's escrow docs and loan docs. And then what happens? You sign. You can do it a couple different ways. You can either sign at home or at your work, at the comfortability of your own home, right? You can sign there and the mobile notary can come to you, okay? Or you can sign at escrow. If you sign at escrow, if there's any errors and you're doing during the daytime, they can make changes or call the lender, right? So you can sign it at home if it's convenient to you, or you can sign at escrow. If you do sign off-site, like you don't sign at escrow, the notary has to be approved by the title company, right? You just can't use a random notary. The title company has to approve the notary. Also, the notary has to have a specific type of bond, all right, and insurance. So safest, sign at escrow. But if you want to sign remotely, you definitely can. So you can sign your loan docs, right, and your escrow docs. So once you sign everything, right, step 8, or step 9. All right, step 8, right? Bringing in your money. Okay? Once you sign, that's what I'm telling you guys. No matter what you've done on step 1 to 7, nothing is guaranteed. You can promise your firstborn, but if you don't do step 9, nothing matters. So I'm telling you guys right now, nothing is guaranteed. I know you guys all get scared, which I understand. You're signing all these documents. You're signing away your life. As long as you don't release your loan contingency, you cannot lose your deposit. But once you release your loan contingency, right, which is 21 days after the purchase contract is signed, if the 21 days happen, you have a release contingency, you can't lose your deposit. You have to physically sign something. If you physically sign something and you don't bring in the rest of your money, you lose your deposit. All right? But don't be afraid. You're not committed. You're not, committed to a loan because you sign an EMD check. You went through this whole process from 1 to 7. You lock your loan. Nothing is guaranteed. Till step 8, you bring in your money. Once you bring in your money, make sure it's from an account that the lender has validated. I see this happen all the time. You go out and you use an account that the lender hasn't seen for some reason, or the gift changes at docs. Happens more often than you think. Make sure it's an account that the lender has seen. And you don't, because also the lender's going to ask for a transaction history. So you gave them a bank statement. In between the bank statement to when you cut an EMD check, if there's enough money, you're fine. But if there's not enough and you had to deposit other money in there, it better be a payroll deposit. If it's other random deposit that you can't source, you might have to back out the money and you might not have enough money, right? So it's important. Use funds the lender has validated, and it's enough funds in that account to close on the loan, right? When you're looking at your loan estimate on the bottom of page 1, it's your cash to close, right? You'll see that at the bottom of page 1 of the loan estimate and the bottom of page 1 of the CD, cash to close. So that's the amount of money you are going to bring in to close on step number 8. Okay, once you bring in your money, you do your final walkthrough and you're A-okay, right? Step 9, the loan funds. That means the lender, right, sends the funds to title, titles disperse, and once it disperse, it records the next day. Unless you do special recording where it can record same day, right? Check your local county with your lender, with the title company, right? Hey, do you do special recording, or does your county do special recording? Why is that important? I've seen loans fund on Friday, but they get unfunded on Monday. That's why realtor sellers do not want to release the keys, right? Because once they're in the house, they can mess something up, right? So once the loan funds, right, you bring in your money, the loan funds, it has to record. Once it disperses, it records. So once it records, you get the keys. So if you fund on Friday, you might not get your keys till Monday unless you've already made special arrangements with the seller or special arrangements with title to record on Friday, right? See it happen all the time. If it funds Thursday, you're fine. Friday, it'll record. If it funds Friday, you might not get your keys till Monday. It's the worst when it's month end and it funds on Friday and you don't get your keys till the following month, right? That's like the biggest burn ever. So make sure you pay attention to that, all right? So that right there, guys, I think I've taught the 9-step home buying process so many times. I think this is probably my most elaborate. Was this probably one of the better ones? I spoke slowly.
This is one of the most well-spoken ones.
Yeah. This is one of my most well-spoken complete home buying process. So that right there, my friends, is a 9-step home buying process, right? Step 1, find a lender. Get approved. They got to run your credit. Shop your loan. Step 2, find a realtor. Make sure they have a license. Make sure they know how to negotiate. Make sure they know about construction. Then you have the lender and the realtor talk. Step 3, find a home. Once you find a home and the seller agrees, you open escrow. If that EMD check does not clear, escrow doesn't open. Escrow starts because you signed the purchase contract, but doesn't open until that check clears. Now, don't forget, step 3, you can lock your loan once you sign that purchase contract and that EMD check goes through, right? So step 3, you can lock at starting step 3. Step 4, you initiate that approval. If you did step 1 correctly, you got that underwritten approval, step 4 should be cake. You just need updated information. Don't forget, sign your intent. You have 3 days to get the loan estimate. You're going to get that intent to proceed, right? Make sure you fill that out, sign that appraisal form so you don't get, so the transaction doesn't start stalling out, right? Step 4, you can lock whenever you want. Step 5, clearing conditions. This is where loans die. This is where you want to be on all alerts if you're in step 5. If you're clearing your approval conditions, right? You want to make sure credit clears, or income clears, or credit clears, income clears, asset clears, and the home appraises. If it doesn't, step 5 is where the negotiating happens, right? In step 5, if they cut your income, they add more debt where your DTI, if your DTI, step 5 is where your DTI can change. If your DTI doesn't change, you're fine. If it changes, this is where you got to bring in a bigger down payment, pay off debt, add a cosigner. Step 5, if you can get through, if you do step 1 and 4 correctly, step 5 should be a cakewalk, right? Step 5, at this point, you got to lock your loan. Step 6, closing disclosure, right? The final approval's out. There's no more conditions to be met. The closing disclosure goes out, right? And you make sure you review it. If it's more off by more than 1/8 of the loan estimate, right? Then you have to wait 3 days. If it matches or under 1/8, you can move forward. Closing disclosure goes out. You sign it, right? You bring it. You know your cash to close, but don't bring in your money yet. And then loan docs go out, right? So after that, the lender sends out loan docs And then, of course, once they go out, then there's escrow loan docs. But lender loan docs have to go out first. And then step 7, you sign, right? Remember, you sign your loan docs, you sign your escrow docs. You can either sign it at home with a mobile notary or sign in person at escrow. If you use the mobile notary, make sure the notary is approved with that title company, all right? A lot of times, there are notaries that just do mortgage docs, right? They'll probably be approved by every title company. Don't use cousin Johnny who just got their mobile notary license. Most likely you're gonna have to sign again, right? So once you sign docs, step number 8, you're bringing your money. Make sure it's an account that's been validated by a lender. If it's not validated by the lender, do not bring in the money. You know how many deals I've seen die or stall because they use some account that the lender hasn't validated, and now they can't prove the money, and they have to back out. Oh, it gets crazy, right? So bring in the money the lender has validated, right? If you're getting a gift, wire the money from the donor to escrow. You don't have to source the money. If you send it to a person's bank account, now they're going to want to see the donor's bank statement, and they want to see the borrower's bank statement. They want to see the wire come through, right? So if you're getting a gift, it's better that you wire it directly to escrow, okay? And then you do your final walkthrough. Once you bring in your money in the final walkthrough, you're almost done. Remember, step 1 to 7 doesn't mean anything unless you bring in your money. Nothing is guaranteed unless you bring in that money. But remember, as long as you don't release your loan contingency, you can release your appraisal contingency. You can release your home inspection contingency. As long as you don't release your loan contingency, you won't lose your deposit. But if you have and you don't bring in the rest of your money, you just lose your deposit. You don't owe anyone anything. You're not obligated to any loan, okay? But once you bring in the money, you do your final walkthrough. Step 9, the loan funds. The lender sends the wire to title. Title disperses the money. And when they disperse, it records. And remember, if it funds on Friday, make sure it records on Friday. Typically, it'll record the next day. If you fund on Friday, it doesn't record, you won't get your keys till Monday. The worst is Thanksgiving. It funds on that Wednesday. It doesn't record. Thursday, Friday, Saturday, Sunday, you won't get your keys till Monday. I see that happen all the time during Thanksgiving, all right? So be careful. And that, my friends, is the 9-step home buying process. Hopefully, you understood the video. I brought you value. Now you know what happens in every step. And now you know how to take every step. And now you're one step closer to home ownership. All right, guys. Hopefully you enjoyed the content. I really appreciate everyone who watched. If there's any comments or feedback, bring it on. All right, guys. You like that one, Andy?
Yeah.
Did I do that in 15 minutes? Oh, 30 minutes. Okay. What's up, Gus? How you doing? What's up, Anthony? Jane P. Hey, man, trying to decide how to lower monthly payment. Better to do single premium with 5% down or save more for 10% down. Jane P. has a great question. Hey, man, trying to decide how to lower monthly payment. Better to do single premium PMI with 5% down or save more for 10% down. What you want to do, Jane, is you want to find out how long it would take you to save 10% down. I've ran the numbers. If you buy now with 5% down and you pay PMI, and if you buy now with 5% down with paying PMI, it is cheaper than trying to save 10% down. Okay? If you by the time you save their 10% down with prices going up, and when we don't know what rates are going to be, you're typically going to end up paying more. Remember, if you don't buy today and you wait to buy, let's say it takes you 2 years to save 10% or another year. Every year you wait, you're losing 4% at least in appreciation, right? But the best thing to do is run the numbers. For me, I would go 5% down, pay the PMI, the money that I save instead of going 10% down. If you have the money, pay off some debt, right? Or hold the other 5% in case of a rainy day. Unless you have that much money sitting around, then do the 10%. I would not, right? I would rather pay a higher payment but have that extra money to help me cover the payment. Let's say the payment between 5% down and 10% down is $50 a month, right? But let's say 5% down, 10% down is $25,000. Do the math, right? Or let's say it's $100. In a year, that's $2,400. But for you to increase another 5% down, if it's $20,000, I'd rather pay the extra $100 a month, right? That's what I would do. Hopefully that helps you out, Jane. John F. Parent. QQ. You mentioned an approval lasting 120 days. Is that traditionally for conventional only or all loan approvals? Great question, John Parent. Question, you mentioned approval lasts 120 days. Is that traditionally for conventional loans or all loan types? The approval for 120 days is good for all traditional mortgage loan types. FHA loans, VA loans, USDA loans, conventional loans, down payment assistance loans that follow Fannie Mae and Freddie Mac rules. Your credit report is good for 90 to 120. The difference, after 90 days, the lender does something called a soft credit pull. If there's no, they can tell that there's no other transactions, like you didn't pull credit to do other things, you didn't max out debt, you didn't help someone co-sign, they leave it alone for 120 days. But if in 90 days they see there's some inquiries, when they do the soft pull, they're going to want to pull new credit right away, and then that's why your credit could be good for only 90 days. But it's good from 90 to 120, depending on after the 90 day, how busy have you been with your credit. Hopefully that helps you out. You get that one?
Yeah.
Brittany, does pending to active means on site like Trulia and Zillow that the house is sold? Pending to active, right? So I think everyone has their own definition. When I see pending, what?
I had another question before.
She did have another question. Okay. Brittany, does income in cable account for our kids with special needs need to be sourced if money from those accounts are being used for down payment? What? CalAble. So if you're getting money from CalAble, you have children, and you're getting that money, yes, it does have to be sourced. You have to show that you are getting the money and that they want to see the transfer of funds. So outside your paycheck, right, you have to source all other source of money. If you sold something, right, so let's say you have a deposit for $5,000. You better have sold something for $5,000, deposit $5,000. If you sold something for $7,000, deposit $5,000, like I just used a $2,000 for buying something else. They're not going to go with that. It has to match dollar for dollar. But if it's from something for kids, and you're gonna get the money, they want you to source it. Hopefully that helps you out. Randy, hi man. First off, thanks for all the info. Thank you finally to decide to go for a home. Congratulations, Randy. Guys, let's clap for Randy here. What does pending to active mean on sites like Trulia and Zillow that the house is sold? So typically, it'll say pending or contingent. If it's active, that means it's actively on the internet, right? What you want to do, actively on Zillow or actively on the market. What you want to do is you want to sign up for a realtor's IDX, right? Information exchange, right? When you sign up for information data exchange, right? Brittany, so once you sign up for a real estate agent's IDX, information data exchange, those are the true home searches. When another seller says a home is active or pending, right? If it's active or contingent, right? You'll know to either look at the home or not look at the home, right? If the home is already on the market or not, right? Don't look at the Trulias, don't look at the Zillows. A lot of times they won't say pending or contingent because what they want you to do is click through so you can talk to one of their realtor who's going to sell you on another property, right? You want to first sign up for a real estate agent's information data exchange, IDX, right? And that will show you if that house is truly on the market or not. Hopefully that helps you out. Azucena, do I have to file my taxes this year before starting my process? If you are self-employed, they can go off your 2019 or 20 or 19 and 18, but they are going to ask for a P&L for 2020. If you're a wage earner, as long as you don't owe taxes, they can just go off your W-2. You do not need to file your tax returns. Hopefully that helps you out. You get that one? No. Yeah, that was a good one. Randy, I'm in escrow, just got a conditional approval. Congratulations. Today, need to send homeowners insurance, home insurance info. I have two questions, or two quotes. Two questions. First, once I turn in the home insurance info, does that mean I'm approved? Second, any tips for home insurance? For me, just shop around, right? If you're turning in your home insurance, doesn't mean the loan is approved. If it's conditional approval, what I would do, Randy, hey, lender, can I get Mr. or Mrs. Lender, can I get a copy of my loan approval? And then you want, hey, Mr. Lender, or loan processor, can you go over the loan approvals? What conditions do I need to clear to take this conditional approval to final approval, right? That's what I would do. Final approval means you clear all the conditions. If you're not in escrow, at least the credit's done, income done, assets done, right? So when you find the house, they just got to clear the value in the house. Hopefully that helps you out. I'm like dehydrated right now. Let me turn on the fan. All right. Al Bundy, love the name. What property issues do sellers have to worry about when accepting FHA offers? When you go with an FHA offer, a lot of times you got to have all the stove's got to be there. There's a list of things that have to be FHA approved when you are selling a home to an FHA lender. Same thing with conventional. Conventional has their own guidelines as well, right? But typically I know it's the kitchen. Also there's chip paint, right? There's a lot of things that you would need. If you want, reach out to us. You can reach out to us at any time. 714-909-1533, right? 714-909-1533. If you're selling a house, Al Bundy, I can send you a list of what they need on an FHA appraisal to be cleared before you accept their offer. Hopefully that helps you out. Christina N. Spouse is coming up to 1 year at his job. Before that, his unemployment is over 6 months due to switching industries. Will this prevent us from pre-approval? Consider a cosigner because of this. Yes. If the gap is longer than 6 months due to industry change and not COVID, you have to wait 1 year, right? So if you have been back at work for say different industries, they're gonna want 2 years. If it's the same line of same position but different industries, after 1 year you can buy. Okay. If it's a different industry and different position, they gotta wait 2 years. Hopefully that helps you out. You get that one? Let me redo that. What? Okay. Christina N. Spouse is coming up to 1 year at his job. Before that, his unemployment gap is over 6 months due to switching industries. Will this prevent us from pre-approval, considering a cosigner? Great question, Christina. Here is the answer. The answer is, if your husband had a gap longer than 6 months, right, and it's not due to COVID, you got to wait 1 year, which you're close to your 1 year. But if he changes industries, but he's in the same position, right? Let's say he goes from sales to sales, but different industries, you don't have to wait 2 years. But if you go from one position to another position in another industry, you would have to wait 2 years. Then you would have to for sure add a cosigner. Hopefully that helps you out. That means you would qualify with just you and the cosigner, not your husband. If you go FHA, they also got to include your husband's debt, even though you can't use the income. Hopefully that helps you out. Got that one? Enrique, what's going on? Al Bunny, what if you locked and rate is better? If you locked and the rate is better, you pretty much, lenders won't let you break locks. You got to ride out what you have with them. Hopefully that helps you out. Or change lenders. Are lender title fees higher than owner title policy? Lender title fees, right? Lender title fees, typically they are just a little bit, not that much. It's not too big of a difference. All right, Al. I'm guessing if you're selling your house, your title policy should be a little bit cheaper than the lender's title fee. Just a little bit, not too much. Erica, what are your tips on USDA loan? My tip on USDA loan, they qualify just like an FHA loan. Just the upfront MIP and the monthly MIP is a lot cheaper when you go when you go with a USDA loan, and the property appraises more than the value and then the price the home is being sold at. You can use that money towards closing costs or down payment. Hopefully or towards your closing costs if you want. All right. So if you write an offer and the home appraises more, you can use that money. Unlike other programs, if the home appraises for more than the purchase price, you can't use the money. But on the USDA, you can. Hopefully that helps you out. Ariel Tipton. Thank you, Min. I've learned so much, of course, since I followed you in August. Thanks so much, Ariel. I know, Lilia, so many steps. Remember, Lilia, you're borrowing hundreds of thousands of dollars. I'm sorry. There are a lot of steps. But remember, you're borrowing a lot of money with either some some collateral. Not, most people, of course, some people can put a lot of collateral, some people can put small. So I don't know your situation, Lilia. If you're putting big collateral, you're still gonna go through the same process. You're still borrowing, hundreds of thousands of dollars. Hopefully that helps you out. Every steps has multiple mini steps. I know. Remember, we're borrowing hundreds of thousands of dollars, Lilia. I'm so sorry. John, how far back do you need to source large deposits? If it's over 60 days, you don't have to source it. Lenders will ask for your last 2 months of your bank statements. If you have enough money in the account without these large deposits, you're fine. But if it takes these large deposits for you to have enough for your down payment closing costs, you will have to source it. If it's a payroll deposit, you don't have to source it. If it's a check, if it's cash, they're going to want to see how you got the cash, right? They're really looking for straw buyers. That's the reason why they're asking you to source it. Hope that helps you out. Typically, over 60 days. What? You got that one?
Nothing. I just I typed the comment back.
JR, thank you. Looking at new builds, builder is requiring pre-approval through their preferred lender just to get on their interest list. Is this common? They said they'll be running credit. JR, it's very common, right? Remember, when you're buying new construction, you are also probably going to add upgrades, right? And also, so many people want to buy. They don't want to waste their time. They want to minimize their fallout. So yes, the builder's going to have to run your credit. Unless, the builder and the lender you talk to, right? So the lender you talk to is going to have to hand over the file. So pretty much all their hard work, they're going to have to hand over to the builder, right? But if they care for you, they'll hand it over with no problem, right? Send over the DU and all the income documents, right? Some builder lenders are like, okay, I'm cool with that, right? But some of them are going to want to run your credit. But I don't mind using the builder lender. The reason why, they're going to help cover your closing costs. If they don't, different story. But it's pretty typical, okay? Hopefully that helps you out there, JR. Lakeisha, have you ever heard of a loan fee loan fee totaling over $9,000? It all depends on what your purchase price is. Remember, closing costs is between 2.5 to 3.5 the purchase price. When the purchase price is under the 350, it can be 3.5 to 3%. Over 350, probably 3% down to 2.5. Once you get past that 600 grand, 700 grand, it's about 2%. Worst case, 2.5. Hopefully that helps you out. Al Bundy, does Los Angeles County and Orange County do special recording to record same day? I think Orange County, LA, I think Riverside and San Bernardino do not do same day. I could be wrong, but I think Orange County and LA, they do same day. Hopefully that helps you out. Randy, can you close before the 30 days if everything is done? If the seller is okay with you doing it, then you could definitely do it. Hopefully that helps you out. Why would a lender fund Friday but unfund Monday? I've seen loans fund Friday, but issues might pop up at the end. So when a loan funds, so the bigger companies, it would be an anomaly for it to happen. Some of these smaller companies in dry states, not wet states, we're in the East Coast lawyer states, sometimes the lender can fund the loan at their discretion, but if they don't get a specific condition to meet their needs, they would have to unfund the loan, right? Bigger companies, you don't see it happening. Smaller companies, all day long, right? And they'll fund, but they won't record, all right? So definitely, it all depends on who you're working with, right? I'll tell you right now, the company I work at, they will not fund it unless everything is cleared. But I've worked at small companies where I can fund it, and then they're still missing conditions, but they just did it because they're running behind the gun. Hopefully that helps you out. Asset conditions. Ariel Tipton, asset conditions. Let's say you give a bank statement. Let's say it costs you $10,000 to close. They look at your bank statement. They look at the beginning balance and the end balance. They see the end balance over 10K, but the beginning balance was 7K. So that means you had $3,000 somewhere. And if they look on your bank statement and it's not a payroll deposit, they're going to go where this $3,000 came from. If it came from a gift, they're going to want a gift letter. And also, if it came from a gift and it was wired to your account, they want the donor's bank statement to see that they sent you the money and that the donor had the ability to gift. If you lent someone the money, they want to see proof that you lent them money. Say you gave cash, they won't let you use that then, right? They got to see all the paper trail. Let's say you sold a baseball card and got $3,000. They're going to look up the baseball card to make sure that thing is even worth $3,000. All right? And you got to prove that you once even owned it, okay? So those are asset conditions. Rick G, how do you determine the amount of deposit for escrow? That's all in the hands of the buyer's agent and seller's agent. It all depends on what your buyer can get away with. In a buyer's market, you don't need a huge deposit. In a seller's market, you might need one to let the seller know you mean business. Hopefully that helps you out. That was a good one, Andy.
That was 49.
Okay, Ariel answer that. Ricky G answer that. Ariel, what if you have a VA loan and you're putting 0 down? Step number 8 and 9. So
What was the last good one?
What?
Can you answer that one?
What?
What was the last good one?
That was how do you determine the amount of deposit for escrow? That was Rick G. That was Rick G. Okay.
Cool.
So Ariel Tipton, what if you have VA and you're putting 0 down? Step 8 or 9. If you're doing a VA loan, step 3, you still got to do an EMD check, right? Step 8, you still do a final walkthrough. Step 9, the lender still has to fund the loan, right? Once you sign loan docs in step 7, right? You might not have to wire in any money, but you do your final walkthrough. Typically, they shouldn't fund your loan without your permission, right? So step 8, you give them okay, USA, after you do your final walkthrough. And then step 9, the lender still has to fund your loan, disperse it to title, title disperses the money, and then they record. Hopefully that helps you out. Lilia Morgia, right? Our home price is going up. Everyone has their own opinion. Today there was a guy, Instagram guy, who sent me a message from another influencer. He says the market's gonna crash, prices are gonna crash, right? He says there's 2.7 million homes. So today, a report came out that mortgage forbearance went from 2.7 million to 2.6 million. That means 100,000 people, households, fell off mortgage forbearance and didn't go into default or anything like that, right? So the 2.6 million people, out of 2.6 million, over 80% of people have more than 20% equity. 80% of the nation. So out of this 2.6 million, 80% of that, if they're in a jam, they can sell their house. 9% is underwater, right? So that means you have 11% that have some sort of equity, right? So if they sell, they might not walk off with anything or with little. But 80%, if they have to sell, have money. The other 9%, right, which is 2.6 million, let's round it up to 10% just to make my numbers easier, is 260,000 houses. We are short almost 4 million properties. That's just my opinion. I don't see prices slowing down, but I don't see prices going down, but I do see the pressure of higher interest rates suppressing prices from growing at the rate it was growing in 2020, right? The demand is still high. That means there's people out there, there's more people with jobs that did not get affected by pandemic that want to buy than people who are in forbearance, the people who are losing their jobs, right? Not losing their jobs, take that back. People who want to buy compared to the ones in forbearance. Majority of these people in forbearance, the 2.6 million, we don't even know who can make their mortgage payment, who can't. But remember, mortgage forbearance, if you have a conventional loan, you got 3 more months. If you have an FHA loan, you have 6 more months. If you have an FHA or VA loan, your current lender is offering you a loan mod to refinance to drop your rate 1%. So if you have forbearance without checking your income or credit, they're going to refinance you, right? Or they might check your credit. Think about it. They're not checking your income or the value of the house. They're going to refinance you and drop your rate 1%. So the government is doing everything they can to keep all the 2.6 million to go down. But even if it did, it's only a portion, which is not enough. That's what I think, right? But everyone has their opinion. I think prices won't move as fast as it is, but it's really going to separate how much everyone can qualify for. And if less people qualify for less, that's going to suppress the prices to not go up faster. It's probably just either flatten out or stay stagnant or just move slowly. Hopefully that helps you out there. Kitty Cat, what's going on, girl? Kitty Cake, what's going on? If I buy a home conventional, when can I rent it out without any backlash? You have to wait. Oh, great question. Kitty Cake, if I buy a home conventional, when can I rent it out without any backlash? If you buy a home, you have within 60 days to move in, but you have to live in it for at least 12 months before you rent it out. Hopefully that helps you out. Get that one?
Got it.
All your offers are outbid. I am so sorry. Just be patient. If I kitty cake, if I raise my credit after the first pull, can I request another pre-approval? Yes, you can. How long does appraisal process take? Vanessa, how long does appraisal process take? When you're buying a home, appraisal process can take after they you sign that the intent to proceed within 3 days, they can order the appraisal. It can take 10 days, right? Typically, a appraisal contingency is 14 days. So hopefully you get it done right away and you get it within the 14 days. Should take about a week, no more than 2 weeks. Hopefully that helps you out. Hannah, this is Charles from the Bay Area. What up, Charles? So with the down payment assistance program, usually how much do you usually have to come out of pocket? It all depends on your purchase price. If you're doing the platinum program, typically it's going to be 3% of the purchase price. If you're going to go with Cal HFA, if the purchase price is under 400, about 1.5 to 2% of the purchase price. Between 400 and maybe 500, it might be 2.5% to 3% of the purchase price. Hopefully that helps you out. Congratulations, Mello or El Koff. Jesus Chuy Rosales. My parents can't refinance due to lack of income. I plan to help them refinance using my income and credit. Will I lose my first-time homebuyer status? If you help your parents co-sign, and you do not live in the home, and you prove you're not gonna live in the home, certain first-time home buyer programs will be okay with it. Like if you go with a loan that takes Loan Prospect, which is Freddie Mac, they're okay with it. Fannie Mae, they're not okay with it. It all depends on the program. Hopefully that helps you out. You get that one? That was a good one.
Okay, got it.
Jody, if I close 23, when's the next payment? About 45 days. So if you fund on 23rd of February, April 1st will be your first mortgage payment. Hopefully that helps you out. If you fund February 15th, it'll be March 1st. Let's see here. Purchase price $354. Guys, remember, go back to your lender and talk to your lender. Rates have gone up. You might qualify. What?
Oh, all right. The Lakeisha 354,000 is for the. Have you ever heard of a loan fee totaling over 9,000?
Yes, if 354, 3% all day long. I see it, and I see 9,000. So Lakeisha, if your purchase price is 354, closing cost is about 9,000, maybe 10. Hopefully that helps you out. Lisane Lopez, what's going on? How do all these steps happen when buying from a builder 6 months ahead home? So step one, the only one is step 1 and 2 is gonna be backwards because you're gonna find a house first. So the realtor would go before the lender if you're buying new construction, right? But if you go to a realtor, they're gonna tell you to go to a lender to get approved. But if you go to a realtor and go, hey, I want to buy new construction, they're gonna bring you to a new construction, and then the lender will get you approved, right? Make sure your lender and your realtor do talk, right? And then step 3, it's automatic because you found the property. Okay. Step 4, you still have the initial approval, the initiate approval, clear the approval, CD. Same after that's the same thing. Hopefully that helps you out. Gretchen Boland. Does the PMI monthly fee reduce drastically between 14 and 15% down? No. 14, 15% down is going to be the same thing. I'd rather go 14% down and use that 1% and buy out your MI if you want to. But the PMI should be pennies on the dollar at 14 to 15% down. All right. Gretchen, that was Gretchen. Gretchen, if you are able to put 20% down FHA, is there no PMI? If you put 20%, if you put 10% down or more on an FHA loan, after 11 years, the monthly PMI falls off. Hopefully that helps you out. Al Bundy, can a lender ever reverse a recording? Yes, it can happen, right? It can't. Oh no, if it's recorded, it's done. I take that back. They can reverse a funding. If it's recorded, it's recorded. Al Bundy, thank you so much for all your information. You're welcome. Ariel, you're welcome. Guys, if I brought you value tonight, do me a huge favor. Hit the like button on this video, right? Help out the algorithm. If you still have questions regarding home ownership, right? Definitely. You can always call us. You can message us on Instagram or Facebook, right? You can email us at info@what'samortgage, or you can call us 714-790-1533, right? You can call us, text us, or email us, or message us, right? And here how it goes. Keep it 100. When you guys do call, text, or email, I have a round robin of about 14 people helping me. I jump in as much as I can. Typically, you'll catch me during the daytime and on the weekends, right? At nighttime, you might catch one of my guys. If you're like, I need to talk to Min, just let them know. They will get you to me. But if you're okay talking to my teammates, right? I've educated them. I've empowered them. I've given them the information that I want you guys to know and learn, and they're going to pass that on to you. But like, I need to talk to Min. When you call, if you get me, you get me. If you don't, just ask me if you need to talk to me. Hopefully it helps you out. Gus, what's going on, Gus? What can I potentially afford? $70,000 and have can you want to pull up a thing?
You pull up a
Yeah.
just go ahead and pull it up.
Okay, so 400 grand. Let's do Gus's loan estimate for him. I mean here we go. Just pull one up. Go to it. So for 400,000, your payment's probably gonna be about $2,600 now. Rates have gone up. If you're paying your own closing costs, right? It all depends on what you're looking to do. But let me put this in there. Let me see. Techie lender. Let's go here. Guys, can we do this for Gus? Let's do this for Gus, okay? You want to size it?
Yeah, size it.
All right, let me see. What's Vanessa's question first? Let me answer Vanessa here. Let me answer. So Gus, as he pulls it up, let me answer some questions here. So Gus will be the last one. I'm done. Okay, guys. I gotta close out for the night. So Vanessa, does PMI automatically disappear when you hit the 20% equity? Here's how PMI works, guys. I'm looking over here. The camera's here. So this is how PMI works. On an FHA loan, if you do not put 20% down, if you don't put 10% down, the only way to get out an FHA monthly PMI is to refinance out of it. You can go from FHA to conventional and still have PMI unless you want to wait till you have 20% equity, right? But if you buy FHA and you put 10% down after the 11th year, your PMI can fall off. I've heard rumors on the street on FHA loan. They're thinking about allowing the monthly PMI to fall off without refinancing it. We don't know the terms yet or when it's going to happen. Also, they're going to make the monthly PMI cheaper on FHA since everyone's going conventional now. FHA out here might be making changes. Quote me on that. I just don't know when or if they're going to do it, but there's talks that they're thinking about doing it. Okay, conventional loan, Vanessa. You can either pay down your house 20% of the original purchase price, and you can call the lender and they will remove your PMI. If you pay down your house 22% of the original purchase price, it will automatically fall off. If you buy your home and the next year you have 20% equity, you would have to refinance to get rid of the PMI. If you have 20% equity after 5 years, you can get a second appraisal done and the PMI will fall off. If you have over 25% equity after 2 years, you can get an appraisal done and they will remove your PMI. Seems like that has a higher chance from happening because if rates are an all-time low, which it still is, even though rates are climbing, you would attack more principal than interest at an earlier stage. So I think year 4, you would have more than 25% equity. And at that point, you could probably get an appraisal done and get rid of your PMI without refinancing. Hopefully that helps you out. All right, ready?
Let me switch it over.
Okay, let's do this, guys.
Let me switch it over.
1 second here, guys.
Oh.
All this for our boy Gus here, okay? Gus. Let's go down to the qualifier. So, guys, make sure you go down the qualifier. Right? Go down the qualifier. I put the DTI at 50% here. Annual income 70 grand a year. Right? If today he has $700 a month, let's say annually 70 grand. If he buys for 400 grand, let's see if he qualifies 690. I would go FHA for the cheaper payment. 400 grand. Let's say, Gus, we're going to finance your closing costs, right? If you're financing closing costs, your payment will be $2,413. And see here, $7,000 a month. Oh no, $700. Sorry. You will not qualify. You probably will not. You probably qualify FHA because they allow you up to 55% debt to income ratio, but you're a little high. That means you're going to be eating top ramen if you go $400,000, right? FHA will allow you to go up to 55% DTI, which you should qualify, right? But that means your ratio would be really high. I recommend, go back to it. I recommend, right? I recommend, Gus, that you either drop the purchase price or eliminate some of that $700 in debt if you want to have a comfortable mortgage payment and breathe. If you have that $700 a month and you buy something for $400,000, you probably will. You'll still qualify, but you won't be able to breathe. All right. Remember, love the payment before you love the house. Hopefully that helps you out there, Gus. Unless you have cosigners who are helping that aren't going to be on the loan, right? Then I wouldn't do it. Have Cal HFA. I'm in education. Congrats. Cal HFA will only let you go to 45% DTI. Vanessa, what's Vanessa's question on conventional? Conventional, I think I gave you that answer on conventional as well. Gotcha, makes sense. I have 3.5% down. Gus, get rid of some of that $700 a month, or go down the purchase price by maybe $20,000, and it'd be more comfortable payment for you. All right, guys. I really appreciate everyone who watched, everyone who liked, everyone who commented. If you did enjoy our content and you didn't have a chance to like or share it, please go ahead and help me out and do so. It helps out the algorithm. All right, guys. We want to end all our live streams with our attitude is gratitude. Without you, there would be no us. So thank you guys so much. Also, one last thing. If you're not following us on Instagram, definitely follow us on Instagram, okay? We share a lot of new tips that we don't put on YouTube or Facebook, so definitely check it out. And guys, my TikTok is coming out in March. It's going to be fire. Follow me on TikTok, right? You might not see videos right now, but you'll see it.